This podcast is sponsored by BuyBiz.io. Discover premium AI-driven online businesses for sale, perfect for standalone growth or seamless integration. Explore now at BuyBiz.io to kickstart your digital success.
Understanding brand valuation techniques, how companies measure their brand's worth. Learn the key brand valuation techniques companies use to estimate worth and why it matters for business success and investments. Let's talk brand valuation techniques, what they are and why they matter. Hey, have you ever wondered how companies actually figure out what their brand is worth? Branding is this huge intangible part of any business, right? It's not like you can just look at a physical asset and slap a price tag on it. But brands? They have value, sometimes a ton of value, and knowing how to measure that is crucial for anyone in business, investors, or even just curious folks like you and me. So today, I want to chat about some of the main brand valuation techniques used out there, how they work, and why it's pretty fascinating stuff. Alright, let's break it down with some of the most popular approaches companies use when they want to figure out what their brand is actually worth. 1. Cost-based approach. This one's pretty straightforward. Imagine building your brand from scratch. How much would it cost you? This method calculates the value of a brand by looking at the total costs incurred to create, develop, and maintain it. Think about marketing expenses, design efforts, brand campaigns, and even research costs. Essentially, it adds up everything spent to build the brand up to now. The downside? It doesn't really reflect future earning potential or consumer perceptions, which are huge parts of what a brand is really worth. So it's useful as a starting point, but can be pretty limited if you want the full picture. 2. Market-based approach. Now this one is a bit more dynamic. It looks at comparable brands and what they've sold for, or how they're valued in the marketplace. If one company bought an equally popular brand recently, analysts might use that sale as a benchmark to estimate value. Think of it like real estate. If a similar house just sold nearby for $500K, your home's value is probably around there too. This method tries to do that with brands, but since brands aren't sold all the time, or data isn't always public, finding accurate comparisons can be tricky. 3. Income-based approach. Here's where things get way more interesting. This technique is based on the future economic benefits the brand is expected to bring. In other words, how much money can this brand help make? Analysts estimate future cash flows attributed to the brand and then discount those back to today's value. This method considers things like consumer loyalty, pricing power, and market position. Basically, how the brand helps the company earn more than competitors might without it. 4. Royalty relief method. This one is pretty cool and often used by analysts. It assumes the company would otherwise have to pay royalties if it didn't own the brand. So, if a company has a super strong brand, it doesn't need to pay a licensing fee to use it, and that saved royalty is a measure of brand value. The formula basically calculates what it would cost to license the brand if the company didn't own it and treats that as value. 5. Brand strength index and customer-based methods. It's not all about numbers and dollar signs. Some techniques look at brand strength and loyalty, which can be pretty telling. Metrics like brand awareness, customer satisfaction, market share, and even emotional connections customers have with the brand can get factored in. This approach is a bit more qualitative, but blends customer behavior with financial impact to assess brand value. Why should you care about brand valuation? So, why does all this matter? Well, accurate brand valuation is critical in various scenarios: selling a business, mergers and acquisitions, raising capital, or even when launching a new product line under the existing brand. It also helps companies manage their brand better by identifying strengths and weaknesses. And speaking of buying businesses, have you heard about Archie Holdings' AI-based businesses for sale? It's a great resource for entrepreneurs and investors interested in AI-focused companies, everything from tech startups to digital platforms. When you're thinking about the value of those businesses, brand valuation techniques play a huge role in determining if it's a smart buy or not. Check out some cool listings and opportunities over at Archie Holdings' AI-based businesses for sale. If you're curious about owning a cutting-edge tech business or just want to see what's out there, this is a perfect place to start. Wrapping up. Brand valuation might sound technical, but when you think about it, it's all about understanding what connects people to a business. Whether it's through hard numbers, market comparisons, or the story customers tell themselves every day, brands have serious value that's worth knowing. If you're a business owner, investor, or just someone who's curious about how brands really earn their worth, getting a grip on these valuation methods is definitely useful and surprisingly fun to learn. Ready to explore the world of AI-based businesses or see some examples where brand value comes into play? Explore our listings today. There's a lot out there waiting for the right person to jump in.